It's the man Chris Yule in a room full of losing ass traders. He can tell that he's not a fool, got that cool, he ain't in the big risks. He's a realist, he don't buy the dip, he's not just buying any stock. He's making outlier moves, he's picking up big tons. First he shows them trend, template 3.0. He shows them trends, the 10, 20, 50 EMA. Then he shows them outlier 9. Then he shows them how to make money from strong sell to strong buy. He shows them how to trade twice a week, live from the outlier trading room. Don't buy the dip, don't get monkey hammered, just like all those other losers. He knows how to make the money. He shows you the 10, 20, 50 shows you the trend template 3.0. He shows you the outlier 9. He shows you the risk first. Watch Chris Yule trade live from the outlier trading room. Don't buy the dip, don't get monkey hammered, just like all those other losers. He knows how to make the money. He shows you the 10, 20, 50 EMA. He shows you the trend template 3.0. He shows you the outlier 9. He shows you the risk first. Watch Chris Yule trade live from the outlier trading room.
Good afternoon, outliers. How y'all doing today? Okay, we're gonna change things up a little bit. As you know, what gets the clicks on the YouTubes really is all about greed. It's more greed than anything. So I was running through the YouTubes this afternoon thinking, what's picking up right now? SoFi's off the charts right now, by the way. So I think we're gonna have a little bit of a SoFi powwow. I'm not a SoFi bro just yet. I'm far too much of a snob. It's only $19. $19. Who would even buy a stock that's $19? Good gravy. I pity the fool who buys $19 stocks. But I'm trying to think. I think what we're gonna do is we're gonna run through the normal outlier trading. I have a feeling we're gonna go to cash for a minute after today. I think we're gonna run through the normal outlier trading room plan, then follow that up with the single stock newsworthy type thing. Because my job, as you probably know, is chief marketing officer at Outlier. So I need everybody to know about Outlier. And of course, you're going to make tons of money. But well, I can't say that. Following the Outlier 9 has proven to be exceptionally profitable, but it doesn't mean that everything will. Doesn't mean that everything will. Regio says, well, pity me. I like money, lots of money. Okay, so did I read the book? I read a lot of the book, actually. I think I got like 60 or 70 pages into it. Yeah. Thank you for that, by the way, Shane. Okay. Here's what we're going to do. You guys know I like to do a little behind the scenes action before we start and do the actual production value. So yeah, we're going to do this. I'm going to tease the SoFi part to be the second half. We're going to talk about how, let me show you what I'm looking at here. Do y'all like this behind the scenes stuff? I assume you would, because that's why you're here live. Let's see. So what I'm looking at right now is we need to close these two guys, which is fine. I mean, it's super profitable on these trades, but we do need to close them today, it looks like. And then, so I'll run through the whole, okay, here's what we're gonna do. Got it. We're gonna run through the whole trading room. I'm gonna tease that we're gonna talk about SoFi, and then hopefully whomever is watching will stick around to watch the SoFi part. Therefore, they'll be captivated by my incredible charisma and luscious hair, and therefore they will want to come back every day to watch more Outlier, and then they'll become Outliers too. Okay, got it. Corey, this is a fantastic question. I'm gonna hang on to that, my friend. Okay. All right, you ready? Let's do this. Get my slides all set up here. All right, let's go. Welcome to the Outlier Trading Room. My name is Christopher Yule. I've twice been awarded top 100 people in finance. I was mentored by 5 of the market wizards, the best traders of all time. I've been successfully trading since 2009, and this is where outliers like us save time, make money, and start with less risk together as a team. So go ahead and subscribe if you haven't already. So what we're going to do today is we're going to go through the trades that I have on. Don't think we're going to be putting on any new trades. And then on the second half of the show, we are going to be looking at SoFi, taking a look at SoFi, because SoFi is kind of like off the charts lately. So if that sounds good to you, you are in the right place. So my style of trading using Outlier is called the golden ticket trading strategy. And it starts with listening to what the market is telling us, right? And we do that by using the Outlier 9. Now, the Outlier 9 starts with the market, the sector, and the stock, right? Because the slingshot needs to see everything in alignment. So let's go look at the market first, at the trend, the signal, and the breadth of the market. So first, the trend that we're looking at is the 10/20 price over 50. So let's go to the SPY. And this trend template here is what I like to call the Outlier trend template, 10/20 price over 50. And it applies to everything on every time frame because it is just math, absolutely just math. And because of that, it works on everything, right? It works on S&P 500 and it works on SoFi, right? Here's a perfect example using SoFi, right? It trended down for ages and ages and ages. 10/20 price over 50 happened. And what happened after that? Huge run up like this, huge run up like this. So you can't tell me it doesn't work. So we have a bullish trend on the market, and the market is still sitting on a buy signal. So that's nice. I like that. And then if we go into the market breadth, we can see the breadth is continuing to rise. Now, breadth is measuring how many stocks are getting buy signals in Outlier. As you can see, it's pushing up hard and fast. It's up at 73 right now, 73.36, meaning only 27% of the stocks have a sell signal. Now, this gets me a little bit concerned, right? Anytime we hit at or near 75, it's been really consistent as far as these pullbacks go. Now, my rule is that if it is going up and over 75, I'm cool with that. Let it run up as high as it can. But once it starts to turn around, that's when Chris stops looking for new trades. So this is still pushing higher right now. So I would still consider this green. So this would, so all three of these would be green. So boom, boom, boom. So everything we'd want to see on the market is green. Now let's go to today's member highlight. Let's shift gears over to today's member highlight because we've got some great stuff going on in our Discord. Where's my Discord? Over here. And let's go to the share your big wins section. Once I can find it. I always lose it. I don't know why I lose it. There we go. Share your big wins section. And we're having what we call the outlier effect lately. A lot of people sharing these type of moves, like Wild Stimpy right here, making over 43%, and in this account, $20,000 in the last 3 months, right? Talking about the outlier effect in his account. Tug, this is his Roth account with primarily outlier swing trades. He's up 83% on the year so far. Goodness gravy, right? This is the outlier effect that we're talking about, this specifically right here. So congratulations to Tug and Wild Stimpy for that. So do me a favor, tell me your success stories in the chat. I always want to hear from you. And of course, if I've helped you in any way, the way you can pay me back is just by telling everybody you know about Outlier. And of course, the first show of Outlier, you just tell everybody about Outlier. And of course, and you know what, hit the like button too. Now, let's go look at the exits, right? Why would we look at the exits? Now, before I put on any new trades, the very first thing that I want to do is reduce risk in the market, right? We already established the trend, the signal, and the breadth are all bullish. But before we do anything else, we need to see where we can reduce risk. Now, remember, I always want to go over this before we put on a trade or take off a trade. There are no expectations on the outcome of any of these trades that we put on. There's no profit targets on any of these trades you put on. I just have a plan to get out when one of my exit signals happens. Now, let's jump over to SoFi, because I want to talk about SoFi for just a moment here, right? Having profit targets is so asinine. It is so dumb. It is so pointless. It is so stupid. Reason being is, let's say that your profit target of SoFi was around, let's say it was $20 right here, right? And you were so stoked on this huge move up right here. And then, oh, it collapsed all the way back down and it never hit your $20 price target, right? Well, how long are you going to wait before it gets back up to that point? If you're looking at right now, that was somewhere, that was in late January when it came close, but not quite. Now we're into July. If you're still holding SoFi, trying to get that $20 price target, it might have taken you 7 months to get to that, if it even does get to that. So by anchoring to a price target, you are setting yourself up, in my opinion, for a lot of stress and a lot of headaches. Okay. A lot of stress and a lot of headaches. So that's why I wanted to mention that as we're going through here. Now we're going to do some analysis on SoFi just in a little bit. So hang tight. So on my exits, the SPY has not closed under the 20 EMA. That is a close all trade signal. And the sector and market breadth have not had crossovers inside of OVTLYR. So if we look over here, let's go back to the SPY. While it is down today, nearly 90 basis points, that's really just a blip on the radar. Stocks are crashing down to levels we haven't seen since Wednesday last week. I always like to give that a little bit of perspective right there, right? We're down to the price level that it was last Wednesday. So don't get overexcited here. But we're not under the 20 EMA. So I don't have a market signal to close everything yet. But I have 2 trades left on. Those 2 trades are KKR, which has been a tremendous move. A huge move, a big, beautiful move, if you'd like to call it, and Capital One Finance. Both of these trades are what I like to call easy. Both of these trades are what I like to call effortless, right? This is how trading is supposed to be done. This is how trading is supposed to be done. So we have rolled both of these 2 at least twice, right? Rolled, and rolled. Yeah, for sure. We've rolled both of them twice. So we've been taking profits all the way up. They are not below the half ATR from entry. They're way up higher than that. They're not breaking the 10 EMA right now, either one of them. The 10 EMA being my trailing stop. And they have not run into any outlier blocks. They've not had a gap and crap, but the prior day low is causing some issues. Now, after I roll the trade, that means I've moved up my option strike closer to the money. I have taken profits off the table. I've taken partial profits when I did that. And I've done it twice for both of these so far. Taken partial profits. And I kept the trade alive, and I freed up capital to make other trades in the process. But today is the day where both of them need to be closed, right? Because this is below the prior day's low, and Capital One Finance is also below the prior day's low. And that's when I get really aggressive. Is after I've rolled something, I want to get out and keep my profits, right? Look at this big, beautiful move right here, both on Capital One and KKR. So we need to go into, let's start with KKR. Let's close this one first. KKR has been tremendous. Let's go to KKR. And I want to go ahead and close these trades. These are the only 2 I have on, and both of them are getting exit signals today. So I'm going to focus in and close the KKR 130s on the July 18th. The 130s, current price is around $7 or so. 680 is mid price. And let me close full position. 680 is mid price. Let me see if I can get filled at 680. Submit. Ooh, fill at 689. That was a really good fill. Now let me go to my other account real quick and close that one in KKR. Close full position. I doubt I can get 689 again. That was bonkers. So yeah, I just tried it for 685. It's not filled just yet. Hold tight. KKR still working 685. Let me drop it down to 680. That was what I expected to get on the first one anyway. 680. Filled at 680. Oh man, I got a great one on my first one. Got a great fill, 689. Okay, so now I'm going to open up my portfolio manager and I'm going to show you my returns, and I'm also going to post it out in our Discord so you can follow along if you choose to. So KKR, I just closed. I got 689 on my big account, which is the one I'm tracking after. And 689, 689. So between roll number one, I rolled it, or well, I spent, in fact, let's do the math here. I spent 1040 on the trade, and then I rolled it minus, and I got $4.20 in credit, and then I rolled it again for another $4.40 in credit, and then right now I just closed it for $6.89 in credit, which means my total gain on the trade is $5.09 on 1040, which is 509 divided by 1040. So a 48.9% return. I'll take that. I'll take that all day. I'll take that every day. Yeah, 48.9% return in my portfolio. This was a 5.47% gain on my total portfolio. So hang on real quick. Let me put this in here. So this is trade number 1. Copy this over. 7-7. Trade number 1 closed. KKR. 718. 130 calls because I rolled it a couple times. For 689, wasn't it? Activity. Yeah, 689. Oh, such a good fill. 689. And the reason being was because it closed below prior day low. That was a 48.9% gain and a growth of my account of 5.47% account impact at everyone. Okay. So if you're following along, you just got that notification in the Discord. Now, let me ask you a question. How much did you make on this trade? Tell me in the chat. I want to highlight some of you who have made some money on this, right? These have been big, beautiful trades, right? Let's see. Who wants to share how much they made on this trade in the chat right now? All right. While you're typing that in, let me go over to Capital One. And we need to close Capital One over here. Capital One also below the prior day's low. Ah, there we go. Steven made 49.5%. Outstanding, Steven. Ozzy made 22.4%. Stocky Locky made big gains. Outstanding. Virgil says, close KKR and Capital One. Both were rolled once. So I learned my lesson. Let your winners run. Yeah. Hard discipline from this day on. Thanks. You are welcome. Outstanding work. Mikey Mike the market maker made 28%. Albertone made 39%. Kevin made 38%. Amy made 5 figures. Outstanding. Backlav made 62%, 4% of his portfolio. Underground Jim made 65%. This is what it's like to trade with OVTLYR. I don't know what else to tell you. This is what it's like. And I'm so stoked. So this is what I want to do as well. Whenever I hear or whenever I close a trade, I want to hear from you how you did, right? I want to showcase you. Like Andrew said 54%, closed everything before July 4th to avoid the stress. Dude, outstanding work. And like Pete made 33%. Super, super, super proud of you. Right, this is how it's done. This is how trading is done. Isn't that fun? Isn't that fun? Be sure you tell everybody about OVTLYR. Okay, let's go to the next one. Capital One. Capital One. So I've rolled this a couple times. So this is my last trade right now. I am this one here. Capital One. I'm in the 210s right now. So I need to close full position on Capital One. Capital One, July 18th. COF. Capital One, July 18th. The 210 calls right here. And see if I can get fill at 920. Man, I got that good fill earlier. Let's see if I can do it again. 920 is what I put it in. 920 is what I got. I will take it. I will take a 920. Okay. Let me switch accounts. Close that one. And close full. Let me know in the chat how you did on Capital One. Close the first one at 920. Let me see if I can close the second one at 920 as well. Yes. Okay, cool. Got out of both of them. So I am now 100% back to cash. 100% back to cash. So this makes 7-7. Trade number 2. Close Capital One. And like I say, while I'm typing this in, tell me how you did in the chat. That's what I want to know. 210. It doesn't matter about how I did. What I care about is how you did. How did you do in this trade? Capital One. Got out of it for, oh geez, I totally forgot already. 920. That's right. 920. 920. So let's do the math behind it. Math behind it was we got in Capital One for $15. And then I rolled it twice. First roll was for 440. Next roll was at 877. And then we just closed it right now for 920, which means 737 over the original $15. Means a 49.13% return on this one. Pretty sweet, right? This is what I mean by trading should feel effortless. In my account after fees, it looks like it was 49.09%. Close below prior day low, 49.09%. That was a gain to my account of 5.17%. So in those two trades, I have grown my account by 10%. On those two trades, I have grown my account by more than the S&P 500 average for the entire year. David had 51%. Viet had 67%. Senior Wahoo rolled KKR twice for 57%. OVTLYR 42%. Outstanding. Darvium 52%. Account impact 5.6. Thomas 29% and 36%. Look at this. We can do this all day. Glenn 49%. Isn't this so cool? I'm so proud of you guys. Outstanding work, and totally transparent, because this is what I do live on YouTube. So congratulations to all of you. I am so proud of all of you. Now, with that being said, I'm completely out of the market right now. Let's see if we can put on any new trades. Let's see if we can do any new trades, right? Now, real quick, what is OVTLYR and how does it work? Well, old Uncle Warren used to say, be fearful when others are greedy, and greedy when others are fearful. OVTLYR is a stock analytics platform that shows you if investors are acting irrationally fearful or greedy, and by how much, allowing you to get into the stock before the OVTLYR move happens. Now, if you're ready to save time, make money, and start winning with less risk, it's just 3 easy steps. Step 1, head on over to OVTLYR.com, pick up the annual pass for just 82 cents a day. I think Corey had a question about that earlier, right? Do we offer any type of training? How much does it cost? Well, first off, Corey, it's just 82 cents a day. And if you're on the monthly plan, you can upgrade with one single click, and it's 64% off the regular monthly price. Step 2 is start using the OVTLYR 9. That's exactly what I did on these trades to get these results, right? And step 3 is sit back and relax, because you just found the easiest way to save time, make money, and start winning with less risk. So for me, that puts me at my total combined closed everything year to date number at 55.67% returns, right? So this is how trading is done. You hold cash, you sit in cash, and you don't F up. And then when an opportunity comes, boom. And you sit in cash and don't F up until opportunity comes, and then boom. Sit in cash and don't F up until opportunity comes, boom. This is how it's done. This is how trading is supposed to be. And as you've heard from all of these OVTLYRs here on the live with me, yeah, it is awesome. So let's say, David says, when you say 100% invested, what do you mean? I mean, I'm all the way in, but right now I'm all the way out. I could not be more out because I have no trades on right now except SGov. Now, SGov is a ETF that you can buy that actually pays you daily interest on short-term treasury bills, which is, I wish I'd known about this for years, but SGov is basically how I'm earning cash in my account in the meantime. So let's move on to see if we can find any new trades, right? So let's look at this. What are the sectors telling us, right? We already looked at the market. Let's look at the sector. Let's look at the fear and greed and the breadth across the board. So if we pop into OVTLYR, we can see over here, and we go to the market breadth. I think I already have it. Yeah, I already have it pulled up here. Every single sector is bullish on breadth. Every single sector is bullish breadth. How cool is that? But there is one that I missed earlier that I want to point out: industrials and financials. So financials, we just closed 2 of the financials. Financials, we just closed those 2 in there. First, you'll notice right here, I mentioned earlier, I'm okay with trading as it continues to go up. But once it peaks and starts to come back down, like it did last Wednesday, once it peaks and starts to come back down, I do not put on any new trades in that sector until it resets. Reset meaning it goes up, it goes down, and it comes back up again. So financials are off the board for me. Then industrials, I completely missed this earlier on today, but it's 100% true, is in a similar boat. It went up and it has peaked at 81.27 2 days in a row, meaning it's not getting any more buy signals. When it's not getting any more buy signals, I will also wait until we can see that reset once again. So industrials and financials are off the table for me. Now, I've done a lot of the legwork for you, and I actually pulled a ton of charts earlier and a ton of options chains. There's not much for me. There's not much for me at all. One of them that I thought I would be trading today was DT. I mean, I really narrowed it down to just these. How many were there? 14. And then through these, a lot of options that were just not liquid. So the only one that actually made sense to me was DT. Now, then again, I only learned just a little bit ago, because I completely missed over it, was that DT is in the industrials. In fact, let's go to DT real quick. Let's go to DT. The Donald Trump coin. Yes, that's exactly it. Oh, no, it's not. It's in the tech. I thought it was in industrials. Okay, never mind. We're good. So DT is actually in tech. So I am actually very interested in it. Tech's breadth is down here. So let's go through the next step here, the fear and greed and the breadth. So looking at this, the fear and greed average score in the sector is rising. That's what we want to see. And the breadth in this sector is rising. So that's what we want to see as well. So as easy as that is, we have both of these being green. So we're moving on to the next step on the stock. I really thought it was in the different sector. So we're going to continue forward. What are the stocks telling us, right? We looked at the market, we looked at the sector. Now let's look at the stocks. So we're looking at the trend of the stock, the signal in the stock, and the fear and greed, as well as the outlier blocks. Now we're also going to be taking a deep dive into SoFi in just a little bit, so stick around for that. But looking at DT, it's in a bullish trend. That's what the green overlays mean in the background. A bullish trend with a buy signal. DT is getting more greedy. The sector is getting more greedy, and the sector breadth is bullish. So all of this is green except for the outlier blocks. Let's go double check the charts for outlier blocks. And we can see, where's my list over here? DT right here. No outlier blocks on top of it. Now, what's an outlier block? Well, outlier blocks are, in fact, let's go to SoFi. SoFi is such a great example of outlier blocks. These are areas of large support and resistance. And so even though, like earlier, we talked about setting your profit target up here, if it's above these outlier blocks, it may not ever happen. So let's see, this outlier block, if we scroll way back, was created in December of 2021. The very first time that this was hanging out here, that SoFi was coming up into it, it got rejected at earnings. Now, if you are curious, if you don't believe me, go back to my videos I made right at that time. And I said, watch your back. I think we're about to get slammed, about to get monkey hammered from this order block. What happened? Exactly that. And we created 1, 2, 3, 4, 5 on top of it, right? So it's had a long time trying to figure it out. And you can see once it got up to that same order block again, people were ready to sell because they've been holding it for 2, 3 years. And then finally, the buyers have overwhelmed the sellers and we're pushing higher. This is exactly what Chris wants to see. This is exactly what Chris wants to see. But that's an example of an order block. Now, if we go back to DT, we do have an order block, but it's way up here, 61.25. My rule is 2% or more. And this is at 8.76% above. So I'm good on that. I'm good on that. So this is all green for me as well. Now let's double check the chart. No order blocks in the way, no earnings, and the price is above the 10 EMA. Price above 10 EMA. Earnings are like a month out or so, several weeks out, no issues there. And no outlier blocks in the way. And then it's above the prior day's low. Just double check that real quick. Sure is above the prior day's low. So for me, this is looking great. Next, only proceed if outlier 9 is all lit up green, and it certainly is. Now remember, as we put this trade on, there are no expectations for the outcome of this trade. There are no profit targets. I just have a plan to get out when one of my exit signals is hit. That's it. No profit targets, no expectations. This one could be a loser. This one could be a winner. We don't know. So know that ahead of time. We don't know. So this is how I calculate position size. And you need to do the same too. By doing it this way, we are position sizing in a way that is risk first. Risk first is going to keep us in the game, even if we come across a loser. Every once in a while, we come across a loser. And we don't want to be stuck. So go calculate your position size. Here's the formula once more. I'm going to do the same on my end. All right, and let me do the same for my other portfolio. My family hedge fund is what I like to call it. Now, you're probably thinking, well, why couldn't we have taken any of these, right? You absolutely can. But for me, these are too close to expiration, or they weren't liquid enough. And Dave, one of our amazing outliers, actually had this fantastic post earlier. Dave, I just read it. So let's go back to Dave's question real quick. Because one thing that we have found is, even though my normal limit is at least 250 or more in open interest, but with all of us outliers trading together, we have been able to put in thousands of contracts. And so I really wasn't sure how many we could put on all at once. And so Dave put this discussion out there. Okay, so we've been talking about open interest lately in here and what the minimum really is. I wanted to share my observation. I got into STX on Thursday. By the way, STX's chart is so stinking beautiful. I don't know if it still is, but good gravy. Look at this. That's your 10 over 20 price over 50 bullish trend like you've never seen. Goodness, from 85 to 148, not even looking back. He got in Thursday morning and he made a mistake. He misread the line. He bought one strike higher than intended on the option strike. The difference was several thousand open interest to just 39 open interest. when I observed over Thursday and this morning before I was able to exit was wild swings in the bid-ask price on the options. We went from 20 cents wide, which is what I had when I bought it, to over $2.50 wide. Now, let's conceptualize this real quick, right? Let's go to STX. I don't know which strike Dave bought or anything, but we'll just look around, right? Like this one here, having 1,700, and then maybe one or two next to it having less than 100. The bid-ask spread has tightened up pretty well, but this is what we're trying to get across here, is that if it's 10, 20, 50 cents wide, that's acceptable. If it's $2 wide, like that's a huge chunk of your position that just gets eaten up on that bid-ask spread and not something that you want to deal with. But it widened out with no correlation to actual price change. This created a massive low liquidity environment because of how little interest there was in that strike. This low liquidity prevented me from exiting on Thursday because it swung so wide. Ooh, not cool, right? That's one of my big cardinal rules is you have to be able to get in and out. It's all fun and games to get in, but if you can't get out, it could be game over for you, right? And to that point, Dave said it could have warranted a massive unwarranted loss had he sold. He was patient, and even through the liquidity, even though liquidity was still low, he set a limit order exit and was able to get a favorable fill after a while. After a while, a lot can happen to the price of the stock after a while, so we don't want to have that issue. To put this in perspective, those swings were at 3,000 from best to worst, and they were not in his favor. So to me, the takeaway is to stick with the higher open interest as it protects the bid-ask spread on the option prices and provides some ability to get out as necessary. The option strike met every single criteria, even except the open interest. So it was everything he wanted with the exception of open interest. So even if everything's lit up and it's low open interest, don't trade it, right? And I'm glad you mentioned that, Dave, because this is what I was seeing as well today. This was a mistake on my end, but thankfully he was able to exit favorably this morning. Something to think about when we talk about open interest. So outstanding work, Dave. Everybody do me a favor and pay respects to Dave in the chat by typing Dave. Dave totally deserves the respect for taking the time basically to put his portfolio at risk to find that out for us. So Dave, you are a rock star. And you should be a rock star too by finding out what your option contract number should be. And then I like to look at 21 days to expiration, over 250 plus an open interest, less than 50 cents bid-ask spread, and 20% or so extrinsic value. That's the uncertainty value of the option. And that generally puts us around the 80 delta. You're super welcome, Dave. You're a rock star, my friend. Okay, so looking at that, I looked at this earlier. Let's see if it's still in play here. August 15th, the 73 delta, around 26 extrinsic. My absolute minimum or my absolute maximum is 30%. But let's go take a look at this. August 15th, 52 and a halves. August 15th, 52 and a halves on DT. Now, if you're watching this because you want to hear about SoFi, we're going to get there. I promise you. But let's get through these trades first. So 52 and a half. Okay, 10 cents wide. August 15th. This is a 72 delta, 379 open interest. So you can see this is the most liquid of all of them. $1.62 on 570. Let's just update this real quick. 1.62 on 570. Still gets us there, 28%. So I'm good for it. So this is a trade I'm going to take. I'm going to take it right now. So I'm going to do this. I have my position size correctly. Yes. And yes. Okay. So thankfully I have some cash now. Let's see if I have enough cash, or do I need to sell some out of SGov to fund this? So I'm looking at July 15th, 52 and a halves. Get your position size. All right, I'm gonna try at, nope, I need to sell some SGov. Here's what I'm gonna do. I'm gonna liquidate probably half of my SGov here real quick, just so I don't have any issues with that. Hold tight just for a moment here. Okay, out of SGov in one account. Let me do it on the other account real quick. Just a moment. Okay, now I have liquidity. All right, so let's go back to DT. And let's do it again. Options, August 15th. And we're looking at the 52 and a half strike. And get your position size. Let's see how many, if that's going to be an issue now. I don't think it'll be an issue now. Oh yeah, I'm good now. Okay, put that on. Put it on. I'm trying at 575. Oh, I need to adjust that, don't I? Let me replace that. Let's make it between 580, 590. Let's do 585. Not quite filled. Let's push it up to 590. DT 590. Replace. All right. Filled. My average fill price was 588. Average fill price was 588. Let me do my other account real quick. The family hedge fund. And we're going to go back to DT 52 and a halves. 590 is what I'm going to put in to start. See what we can get filled on. Got the position size I need. I think that went in the wrong account. That did go in the wrong account. My bad. I'm going to have to undo that real quick. Hold tight. Okay, let me double check my work over here. Talk amongst yourselves for a moment. I think I bought too many. I did, yeah. That's no big deal. Accidents happen. When you see that you've made an accident, you need to immediately undo the accident, right? Which is what I'm doing right now. And we're in get filled at. Okay. All right. Now I have the correct position size. So what happened was I put it in my account. I accidentally put the same numbers I was doing for my family hedge fund in my account on top of what I had meant to put in. So now I'm good now. Yes, everything's clear. Okay. Okay. So let's go into Discord and I'll update you on what that was real quick. Now, that was a great lesson right there, right? Accidents happen, even to me. I've been trading for 16 years at this point, and I just made an accident. But that's part of the game and not that big a deal. Hold on. Let me get it open quick. Do me a favor in the chat. Tell me a trade mistake that you've made. Tell me a trade mistake you've made, because I'm not the only one who's ever made a trading mistake. But I just took care of it right now. It's not a big deal. Okay. Today is the 7th, trade number 3, but this was August 15th, 52 and a halves. This was in DT, 52 and a halves. And I did it for, what was the original trade? That's what I care about. The original trade was filled at 588. That's right. DT's current price is 56.71. Okay, there we go. So let's see. Anthony said, selected the wrong strike, date and haste. It happens. You know, it's not a big deal. Glenn says, I hate making a mistake in a margin account under 25K because it uses up a day trade. It does. But listen, it's way better to burn a day trade than to burn your account on something you didn't mean to do. Thomas says he made a mistake. He closed ANGM instead of ANF. Yeah. Deb says the list of mistakes would be too long. I love how calm you are. Yeah, it happens, right? It's not a big deal. Ozzy says he's bought the right strike price. Dave says he's made a mistake with 0-day expiration calls. Yes, a sell instead of buy. Yeah, I've done that too. How did I correct? Yeah, I mean, I bought, let's just use round numbers here. I bought 10 extra that I needed that I didn't need in my account that should have been in my family hedge fund account. So then I had to go close those, right? So then I had to go close those. Not a big deal, right? Ryan says he made a mistake of listening to the Joker. Let's see. Here we go. Little even says, when I was new to options, I tried to sell my calls, but ended up writing contracts to sell on accident. Oh, there you go. Yeah. So basically selling naked calls. Yeah, we don't want to do that. We don't want to do that at all. So that's where we're at, right? We've got DT on the books right now. Now let's go, before we talk about SoFi, let's go put this trade on. Oh, not sorry, put this trade on. Let's go put in our levels to make sure that we know where we're going to get out, which is so exciting, right? So exciting to get into a trade, but the boring part is where we're going to get out. So let's mark up the chart, and then we'll talk about SoFi here. Opening. Boom, right there. And then half an ATR below is my stop loss. And one ATR above is where I like to roll. And another ATR above is where I'd like to roll again. Let's just double check that I got that at the right price for my opening, 56.71. Oh, that's not what I want to see. 56.71. There we go. 56.71. Cool. All right. And lastly, bullish ATR levels. Let's go mark on the chart where our profit target is on DT. So I got in today. DT is currently at 67.40. My exit signal using the outlier signals is when the heat map reaches 67.40 was it today. So it's between 50 and 75, so a 10-point spread. So I want to see the fear and greed get up to 77. That's where I would look to sell if nothing else comes in my way. So we get the fear and greed value right here on this particular stock. So let's say here, 77 heat map target. Let me do 77 on this side. Heat map target is 77. Too easy, just like that. All right, so we know exactly what we're going to do in DT. Now, I promised you earlier we would take a look at SoFi. Let's do that right now. So SoFi is getting a lot of news. One reason that it's getting a lot of news is it's finally getting a move right out of this area that has caused a ton of resistance in the past. So I want to look at a couple news stories, see what's going on the news stories. Then let's run Outlier 9 on SoFi and let's see how it does, right? So let's start with SoFi inside the dashboard. Inside of Outlier. And we can see here that a lot of good is going on for SoFi. A lot of good is going on for SoFi. First thing, we've got this buy signal back on June 20th. So June 20th buy signal came through right here. So this is where the buy signal came through. Rocket ship since then. In fact, how much has it gone up since that point? From close to close, it's up 26%. Wow. In just 10 days. That's crazy. That's really good. So SoFi is looking sharp right there from a charting perspective. Couple things. I don't know if you know about this, but we actually have news over here in Outlier. One over here is, here's why SoFi stock could surge. Or wait, SoFi stock is surging and why it could soar 52% soon, right? So looking at this, here's why it is surging and how it could soar 52% soon. SoFi joins the crypto bandwagon, Mama Cass. It's because it's re-entering the crypto market, right? Wall Street companies with exposure to crypto are booming with stocks in a strong rally like Robinhood. SoFi's also jumped after the company announced a planned re-entry into the crypto industry. It will launch a solution to help people send and invest in cryptocurrencies. Crypto and blockchain innovations can and will be threaded through each of our businesses and capabilities, including buying, paying, saving, and investing, borrowing, and protecting. Let me ask you, you care about this? I don't know. Leave it in the chat. I don't care about this at all. I am not interested in doing anything with crypto. But for some people, clearly, they're excited about that. Next, is SoFi Technologies stock a millionaire maker, right? Is it a millionaire maker? SoFi is rapidly adding users to its banking platform. Its monetization products are helping it finally generate a profit, and still plenty of room to grow its profits in years ahead. Rapid customer adoption with high yield savings. That's very cool. Savers can earn 3.8% annual interest when depositing money with the company. Now that's actually great. That's actually great. As I mentioned earlier, I just got out of SGov, which is a ultra short-term T-bills, and that pays around 4.1% right now. Brian, exactly. Don't care. What does the trend say? But Corey says, knowing the catalyst does help, right? Steven says, Chris, tell us more about the fundamentals. I am not the guy to tell you about fundamentals. I'm just looking at what's available, right? Lastly, SoFi stock has big news. Is now the time to buy, right? Is now the time to buy? I think the time to buy was back when the Outlier buy signal came through. In fact, the Outlier buy signals have given you what percent return? I'm very curious of that. Oh, only 180% on SoFi, only 180% following these buy and sell signals. Now let's run through the outlier 9 for SoFi. Y'all okay with doing that? Let's run through the outlier 9 for SoFi. So first, we know the market signal, the market's trend signal and breadth is bullish. Let's go look at the sector. Let's look at the financial sector. So the fear and greed is growing up here. Fear and greed is growing in this sector, meaning it's getting more and more greedy. This is the average score for everybody in the sector. It's up at 61.57% right now. So we'll mark that green. Next, the breadth of the market. As I mentioned earlier, the breadth of the market is still elevated, but for me, I wouldn't trade it because it has that slight contraction and then it started to go back up again. So I'll give you green, but personally for me, I wouldn't trade it because of that reason. Let's go look at the stock. 10 over 20, price over 50 gives it a green overlay with the buy signal right here. And SoFi is getting way, way, way greedy, but it's starting to level out, right? From the buy signal, it came up from 66 and now it's peaking at 81.23, 81.43 here. So if you're a SoFi investor, just keep your eyes on it. It might be slowing down. It might start to reverse. I don't know if it's gonna, I'm certainly not calling for a crash, but this is a trade that I'm really not sure if I would take. The trend is good. The signal is good. The fear and greed is good, but it's slowing down. We can all see that right there. And it just blew through those outlier blocks. It just blew through those outlier blocks. So honestly, this would get a strong buy. This would get a strong buy. I'm super picky, as you know, so I don't think that I would put it on because of the financials breadth. However, looking really, really sharp. Let me know what you think about SoFi, right? Like Neo Quant says, SoFi is going into earnings at local all-time highs and get it before earnings. Yeah, for sure. Go for it. Slumbermentals. Okay. So yeah, you tell me, was this useful to you? Do you want to see more analysis like that on the different stocks? I'm very curious. So that leaves us with one new trade today, taking off 2 trades. And you know what? That's going to wrap it up for today. Thank you so much for coming to today's Outlier Trading Room. I'll see you right back here tomorrow. But listen, if you're ready to save time, make money, and start winning with less risk, click one of these 2 videos and we'll talk soon.
There's money to be made as long as you are smart. Know where you get it and where you get out. Read charts and follow your own plan. Don't listen to jokers, don't fall for scams. Cash for setups, every market chart's gonna cash is a trade, it's not just you or out. Check in with your key at the very start. No expectations on the trade, just execute. Gonna cash is a trade, it's not just you or out. Check in with your key at the very start. No expectations on the trade, just execute.